Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday 27th of September. A little bit of a mixed outlook on European Open. Little real direction across Forex majors. Aside from this, we have sterling weakness. Now what we've seen today is the Bank of England, one of the MPC members, Michael Saunders, who's talking about the prospect of rate cuts. Now this is interesting because Michael Saunders is one of the hawks on the committee, and that really has hit sterling this morning. Now what happens when sterling goes down or weakens? What we see is FTSE 100 outperforming, and that is again the case this morning. So that's interesting. But generally speaking, sentiment is pretty mixed, a little bit cautious. I think this ongoing situation of dollar strength that we've seen in recent days coming through. It seems as though the dollar is coming out on top at the moment. We've got a whole range of reasons why you should be negative on markets. The only factor sort of balancing that off is the prospect of a US-China trade deal, and the talks are now scheduled for the 10th to 11th of October. So that is a minor balancing factor there. But you've got Donald Trump, that this potential for impeachment is still overhanging him. There's a whistleblower that's now come out about his possible White House cover-up of this Ukrainian phone call that he made, and certainly that is again a negative factor, but it seems as though that the dollar is coming out on top. You can see equities a little bit mixed really on the S&P 500, marginally lower on the day, marginally higher on futures today, but little real direction. But you can see volatility is elevated as equities have started to come off. So that continues to come at the benefit of the dollar. Dollar strengthening tends to be gold negative, and we've seen gold back below 1500 today. I'll talk about the technical implications of that in my later videos. So it's interesting times, but you look at euro dollar, 109.25 was the old September low. That has now been broken yesterday's close and remains down today. So this is a real ongoing dollar strengthening situation that we have. Now what we have today on the economic calendar is another day of US-centric data. We're looking at, for 1:30, the Fed's preferred inflation gauge is core PCE, expected to tick higher to 1.8% on the year-on-year data, as per usual 0.2% on the month-on-month data, but a pick up to 1.8%. So a little bit of a nod towards the possibility that there's no real need to go all gung-ho on rate cuts from the Fed. So that is again helping to support the dollar. We've got ex-transport durable goods today. That's the core number, 0.2% growth on the month of August. Yeah, that would be obviously better than 0.4% negative, but from last month, but across those 2 months, still down. Is that it? Oh, Michigan sentiment, final gauge of Michigan sentiment. This is interesting because we've seen the consumer confidence number dropping 125.0. Now 89.8 was last month's number. We had an increase to 92 at the flash reading. That's expected, so the prelim reading this month, that's expected to be confirmed today. But if you get any negative surprise to that, that would be seen as a negative because consumer drives massively the US economy. Right, okay, let's have a look at my chart of the day, which is the Aussie Kiwi. Now, I spoke about this in my webinar yesterday, and we can see that Aussie Kiwi, the performance, is this beginning to turn a corner? Well, that uptrend that we've seen in the last 6 or 7 weeks is being significantly tested now as the market has corrected back. Now, pulling back from 108.39, 23.6% fib level. That seems to be a bit of a pivot line. That's the low, basically 107 big figure from this week, but also 23.6% fib level area. Look at these momentum indicators. MACD bear cross, stochastics still coming lower from a bear cross, RSI at multi-week lows. So this suggests pressure on to the downside. Lower highs, lower lows. You can see that through the hourly chart. Run of lower highs, lower lows. 60 seems to be an area where the RSI is failing at the moment. Is that going to be again another point at which it starts to fall over? You could argue there is a sort of an area of resistance around this 107.45, 107.50 area. Obviously this reaction high at 107.70 is your first line of main resistance, but it certainly looks as though that the market is still in corrective mode. And I think that the pressure is on to the downside. Now we've got the RBA next week, the Reserve Bank of Australia, expected to cut rates. So is this going to be a point at which we start to see this performance just turning back again, retracing? 106.18 is the 38.2% fib level if we lose the 107 big figure support. So this is an important moment, I think, for the Aussie Kiwi. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and also go to our website where you can sign up for our webinars.